The Canadian Securities Exchange presents your go-to source for trends in junior and small cap markets. Each month, join host Anna Serin and financial expert Bruce Campbell in partnership with Stockhouse.
Hi, my name's Anna Serin. I'm Director of Listings Development with the Canadian Securities Exchange. You're joining us for yet another market this month. We are at episode 7 for 2025. And this month we are going to dive into Bitcoin. Bitcoin once again is reaching new highs, and it's bringing crypto and blockchain issuers along with it, reigniting momentum across the digital asset space. To understand where we are today, it's worth looking back at how it all began. In the midst of the 2008 global financial crisis, an anonymous figure known as Satoshi Nakamoto released a white paper titled Bitcoin, a peer-to-peer electronic cash system. Just a few months later, in January 2009, the very first Bitcoin block, known as the Genesis block, was mined, quietly introducing the world to decentralized digital currency. What started as a radical idea, money without banks, has since evolved into a global financial ecosystem. In the early days, Bitcoin was traded for just a few cents, and it famously took 10,000 Bitcoins to buy 2 pizzas. Today, Bitcoin is a multi-trillion-dollar asset class embraced by institutional investors, public companies, and even governments. Over the past 15 years, the cryptocurrency space has grown at incredible pace. From the creation of Ethereum and the rise of smart contracts to the development of stablecoins, NFTs, and now Bitcoin ETFs. Crypto has gone from fringe experiment to financial mainstream. Along with the way we've seen new regulations, growing institutional interest, and major innovations throughout the blockchain landscape. But crypto isn't the only story this month. We're also seeing continued strength in the metals markets. Gold, silver, and copper all hitting fresh highs, driven by ongoing global uncertainty and renewed interest in hard assets as a hedge. Meanwhile, small and mid-cap stocks are outperforming their large-cap peers, a notable shift from recent years. We'll take a closer look at what's behind this trend and whether this outperformance has staying power. Finally, we'll turn our attention to the tech sector. While enthusiasm remains high, the latest Bank of America Fund Manager survey suggests that many see tech as potentially overextended. We'll explore what that means for investors and capital markets going forward. Hi, my name's Anna Serin. I'm Director of Listings Development with the Canadian Securities Exchange. You're joining us for yet another market this month with none other than my wonderful co-host, Bruce Campbell with StoneCastle Investment Management. Thank you for joining me, Bruce.
Yeah, Anna, it's good to be here, right? The middle of summer and markets are still ripping.
We have fantastic weather currently in BC. We're pretty low on the fire index, which is great news for a summer for us here in BC. But because it's so gorgeous, it is very expensive for you and I to be in the same room, isn't it, Bruce?
Yeah, it sure is. I'm not sure who's running those airlines, but they're making a lot of money.
They're making, yeah. Should we be investing in airlines? Maybe we should think about talking about that next episode. Listen, Bruce, it's July of 2025. And there's always some exciting stuff going on. So we're going to dive right into it. I want to talk, we've talked about this every episode, and it continues to be the same headline, but the prices are different. Metals, they continue to have some of their highest prices across the board. Let's talk about that.
Yeah, for sure. I mean, one of the things, we've been talking about it a lot lately because it's been something that's been dormant for quite some time. I guess I shouldn't say that gold has been performing, but some of the other metals haven't been, and now they are starting to perform. And there's a number of different functions and features of why this is happening. One of them is the US dollar. The US dollar has been dropping relative to other currencies. And this is something that is an inverse relationship typically, where the US dollar goes down, you see metal prices go up because they are priced in US dollars. And we've seen gold really leading the way. And to say that all the metals have not performed, that wouldn't be really accurate, because gold, we have seen it perform, but now we start to see follow through with silver, platinum, palladium. Now we're seeing copper join in as well. So we're really getting a rally with pretty much all the metals happening at the same time.
I love this. This is great news, especially for a potential resource sector in the markets. Just to touch on the U.S. dollar, let's just remind kind of our audience maybe that this is by design, right? The weakened U.S. dollar is with purpose.
Yeah, once the current administration took over, I mean, they've done a lot of things that they talked about. They've done a lot of things they didn't talk about. But one of the things they did talk about was the fact that they deliberately wanted to have a weaker U.S. dollar, and they've certainly been manufacturing that. I don't know if it's the way we would have expected them to manufacture it. It seems like it's a bit of lack of trust, but it's also, the US dollar tends to be a safe haven when markets aren't performing. People like to move their money just into US treasuries or into US dollars, and that, of course, boosts up the price of the dollar just based on supply and demand. The one interesting thing, though, is that now we are starting to get very stretched from a sentiment standpoint. So if we look at the one of the interesting data points is the Bank of America Fund Manager Survey, which was just out a couple of days before we shot this, and they talk about the fact that the dollar is kind of the most the most over short or most shorted that it's been in quite some time. So there's a lot of portfolio managers out there who are betting on a lower dollar to continue. And I mean, I think that that's the trend, certainly in the longer term, but we could see a rally in the short term where it started to move up and spooked out some of those people just because it is becoming a bit of a crowded trade to be so short the US dollar.
Okay, and just remind us, because the reason or the purpose behind a weakened U.S. dollar is part of Trump's efforts to bring back manufacturing and activity within its own borders of the United States, right? So to make it more economical for people to do business within the U.S. Is that right?
Yes, that's right. Yeah, and competitive, right? Yeah.
And competitive.
And it has a big part to do also with, the debt and foreign holders and things like that as well.
Right, right. Okay. So he is successfully maintaining a weakened US dollar, like you said. Some of it may not have been with purpose. Some of it is because there may be a softening of of sentiment towards the US versus actual purpose, but they are successful in that. Now, are we starting to see this, going back to the metals, are we starting to see this trickle out into the resource sector within the capital markets? Are we seeing this in the public companies yet?
Yeah, I definitely think we have. I mean, if you look at kind of how this all started a year and a half or so ago now, when gold really broke out and started to move, you started to see really the big cap gold companies starting to move, and that just continues to work its way down. And now you are starting to see, more activity in the junior and the speculative side of things. You're seeing some of the other metals that are moving, and you're seeing some of their companies that are in those specific areas and those specific sectors that are starting to move. So you are starting to see it trickle down into capital markets for sure. I think if you, kind of rewound the tape 15 years ago and said gold's going to be at this price, what's the overall junior resource market going to be like? I think people would have expected it to be significantly stronger than it is. But sometimes these things take a lot of time. I mean, one of the things we've talked about in the past is that, we saw this negative money supply a couple of years ago, and now it's gone back positive. When it was negative, the money that was outstanding and out into the system was really going after the largest cap companies. I mean, that hasn't changed a whole lot, just from those large cap company perspective. But what we are seeing is that, that's trickling down into the smaller, and that is making its way into the resource market as well.
Absolutely, absolutely. And I mean, when we talk about trickle down, really, on the more exploratory side of the resource sector, the gold price isn't necessarily affecting them directly. What it's affecting is the producing gold companies, are becoming more profitable, more valuable. And when those start getting, kind of at a larger scale and more profitable, money starts to trickle down into finding new into new exploration and hopefully finding new reserves, right?
Yeah, exactly. And right now, I mean, there's a few different dynamics at play there. One is that it takes so long to first find the resource, but then to build it and get it to production that the bigger producers they're looking for ways to grow as well. And I mean, one of the things that they can do with their stock prices moving up is then they can use their stock for currency either by raising cash or by doing an all stock deal to go out and make acquisitions. And if it starts to shorten the time frame that it takes for them to find and build mines, then they're going to do that. We haven't seen a great deal of that yet. We have started to see a little bit, but that would be kind of an interesting trend that I think we'll probably start to see pick up in the last half of this year and into next year with more companies, more of the senior companies look to make acquisitions into either intermediate or junior companies. And then the intermediate and juniors might also look to be going into the Explorco companies where they have not even started or moved down the path towards production, but they're just still finding the resource and building it out.
Yeah, absolutely. Okay, I have one more question for you on the resource sector before we move on. You know, we really, I think every episode we've done this year, we've really had this high focus on precious metals. And I feel like in recent years, that hasn't been the focus. It's been rare earth, battery metals. What's happening on that side of the sector? Because we don't talk about them, and it's been a while since we've talked so much about precious metals.
Well, the battery metals, it's been certainly more challenging for the battery metals. And I mean, a lot of that has to do with two different ideas there, two different factors. The first is that, when the demand or when the projected demand for batteries for SUV or for battery operated vehicles was going to go up so much, what we ended up seeing is that everyone raced to figure out how to produce those metals, and there's been a lot of money spent on that. There's a lot of money that's working towards getting that into production, and it's not that we won't need that, but the demand for the EVs has also dropped back a little bit from where the projection was by this point in time. And so it just means that the market might be a little bit oversupplied right now. So that certainly has had a bearing, and we've seen those metal prices pull back, and as a result, a lot of the stocks in the sector have pulled back at the same time. The rare earths now, that's kind of more interesting with everything happening from a geopolitical standpoint. There's certainly some more interest in domestic rare earth production and bringing that and accessing that from areas that are more geographically and geopolitically stable.
Yeah, very interesting. Okay, well, we'll continue to watch and see what happens there. Now we talked about this in the intro today. We gave everyone a little refresher course on Bitcoin, but Bitcoin has steadily just been growing its bigger footprint within the finance arena globally, I think, and really kind of entering into a more institutional platform. Let's talk about the new highs that we're seeing in Bitcoin and how that's affecting the market.
Yeah, for sure. So it has. I mean, it's been pushing up against new highs again here. Bitcoin is a risk asset, and so as a result, when markets and investors get nervous, Bitcoin does tend to drop, and it did. And since that euphoria has kind of come back into the market, so has Bitcoin. It's gone up, and so have a lot of the other cryptocurrencies. And then what we're seeing just from a flow of funds perspective, I think now that Bitcoin itself is just around $2.5 trillion market cap, and if you add up the others, they're not nearly as big, but they certainly keep pushing that up. But what we are seeing is that there's more institutional access to Bitcoin than there ever has before. In the past, it was very challenging from a few different perspectives. The biggest probably being the ability to have custody of the assets, and now with ETFs that have figured out the custody so that the investment managers can just go out and buy an ETF that settles on the market and sits in their account. There's more demand there, and I mean those ETFs the way they work, of course, is as more demand comes in, they create more units, and those more units turn into more buying for crypto and Bitcoin. And we're seeing more institutional support there, and we're seeing more products as well rolled out. So more ETFs globally that allow investors to invest in that sector, and it's becoming, a larger adopted piece in portfolios. It still is kind of nowhere near accepted on a wide scale, but it's just that incremental dollar that keeps coming in, and it's pushing the price higher.
Do you think that there's a growing interest in the crypto ETF or Bitcoin ETF framework? Because for an investor, where we're accustomed to securities rules and regulations, the crypto is being wrapped around by that within the ETF. Do you think it provides a little security and stability to investors?
Yeah, I mean, it does. It's also the liquidity aspect of it, right? And that, they understand how an ETF trades and what they can do to put that ETF in and out of a portfolio. And they're treating it like any other vehicle that trades on a stock market from that perspective. And then the fund manufacturer, or the ETF manufacturer itself, has to worry about all the other issues behind the scenes as far as, custody and purchasing and sales and all that to meet up with the supply and demand that happens with the ETFs.
Yeah, interesting. Okay. It keeps getting a bigger presence, and I don't think it's going anywhere anytime soon. Okay, let's talk about small and mid cap outperformance. Are we seeing a shift in market sentiment?
Yeah, I mean, it certainly seems that way. I mean, I touched a little bit on just the structural flow in the past with the money supply and the fact that, the biggest companies have been the areas of focus. They still are. I mean, you can't turn on financial media without them talking about the Meg 7. And those Meg 7 kind of rotate around as far as who has leadership and who doesn't. But I mean, just recently, Nvidia, which is part of that group, closed above $2 trillion in market cap, which is fairly significant for sure. But what we've started to see now is that we've started to see a rotation down. So interestingly enough, we do a lot of technical work and compare different market caps to one another. And in the US, the Russell 2000, the S&P 600 small cap index, and the S&P 400 small cap index, they've really been out of favor for quite some time and been underperforming. And now they're starting to perform quite well. And then here in Canada, what we're seeing is that the TSX small cap, which does have some resources in it, has performed fairly well. And the TSX Venture Exchange, which has a lot of resources in it, has really performed well. And interestingly enough, it's breaking through a level that has been in place for about 20 years now, just kind of as overhead resistance. And it still is nowhere near back to its high that it hit way back when, but there's certainly more interest there for sure. And it's always so fascinating because it's right at a time when sentiment swung the other way. Everyone, at the end of last year, everyone was talking Meg 7 and how crowded that market was, but they weren't looking elsewhere. And then this year, quietly, we've started to see some performance in those other market caps.
Super interesting. Well, I know that you look at sentiment a lot, so I know that you put a lot of weight on sentiment shifts, right?
Well, we just watch it because, quite often you have to be cognizant of what's happening. I always like to think about, when too many people get on one side of a position, there's less people to then continue to move that up. And there's new money coming into markets all the time. But the reality of the situation is they do ebb and flow. And so when things swing one way so far for so long, you often have to question whether or not they're going to swing back. And I mean, the resource market's a great example of that. We've seen that market's been very challenging for the last number of years, and now it's starting to get a bit easier for those companies to do financings and to raise money.
Yeah, absolutely. Okay. Okay, let's shift over to the tech sector. I think what one thing that you've kind of talked about is that the sector might be getting a little overextended. What are you seeing happening there?
Yeah, I mean, going back to sentiment, what we talk about, if you look at that fund manager survey from the Bank of America that was out a couple of days ago, it showed the same thing, that we are seeing fund managers the most exposed to technology that they've been since just before 2000, which was the last time that we saw, the big tech wreck that everyone talked about in the dot-com era. Does that happen this time? Well, no, I mean, it might not, because we see structurally a lot of difference. Last time many of those companies didn't have any earnings. Some of them didn't even have revenue. And today, I mean, you look at a company like Nvidia, and it's, the largest market cap out there, but they've been growing their earnings, their revenue and their earnings at a tremendous rate. Can it keep up? We're not sure, but where it was expensive a couple of years ago, it's actually grown into that valuation. Still is a little bit expensive, but it's grown into that valuation. So we just have to be cognizant of those things all the time, that, sentiment's getting pushed, and, you can't use that as an only tool. You have to use it as, a combination of other tools to say, okay, do I have to be aware? And we always just kind of look and say, okay, that's in the back of our mind, that,
Right.
that sentiment's there. And if we start to see deterioration in a number of other things that we follow, it means something, and we need to act.
Okay. All right. Well, we'll watch that as well. Okay, let's get into some CSE issuer news. Bruce, a few new listings. We always love to see new listings in the summertime, which is typically a bit of a quieter time. Welcome to Rush Gold Corp and Trimera Metals Corp. Welcome to the CSE. As you can tell from the names, they're both in the resource sector. We continue to see a lot of strength in new companies coming in the resource sector. That's a lot of what we're seeing. We're also seeing some AI trickle in, which we've been anticipating for a long time, but it's finally starting to trickle in. But very heavy weighted on the resource sector as far as new listings at the CSE. On that note, I wanted to touch on Blue Lagoon Resources. I think I've talked about them in one or two of our episodes this year, but I had this amazing opportunity, and thank you to Rana Vega and his team, to go up to the Blue Lagoon Resources property, the Dome Mountain project. It is 66 kilometers outside of Smithers, BC. So last week I flew up there for their official mine opening, which was pretty exciting, Bruce. I have never had the opportunity to do that. We all went up. They had, key stakeholders, investors. They had the local First Nations band up there helping them open it, and provided an opening ceremony. We got to do a mine tour. It was quite a unique experience. There were people that worked at the mine that had been working on and off at the mine since the 80s, and now getting to be a part of it as they do their official opening. They are expected to output 15,000 ounces of gold per year, and earlier this year they announced that they had received both its mining effluent discharge permits from the corresponding BC ministries, gaining authorization for full-scale underground mining operations on their Dome Mountain project. It was quite neat that you could drive right to the property from Smithers. People get to go home at night and be with their families, which I think is quite a big deal. And they operate 12 months a year, which I thought was pretty impressive as well. So it was a pretty exciting few days for me to get to be on the ground and witness it. And this is something we have touched on, Bruce, but do you think we're going to keep seeing permits issued in BC and Canada?
Well, certainly that was one of the things that, we've talked about in the past, is that, there was going to be a move towards trying to get these things through the regulatory burden in a quicker time frame. And hopefully that's the case, because we have a tremendous amount of resources here in Canada. We have to manage everything accordingly, but it would be nice to be able to take advantage of that.
Also want to talk a little bit about the AI sector. Wiser AI Systems, a pioneer in AI-driven cyber and third-party risk intelligence, announced that they were recognized as Canada's top 100 AI companies by the 2025 All-In Summit. This prestigious designation highlights the strength of Canada's AI ecosystem and underscores Wiser AI's leadership in applying agentic AI to global risk prediction. Wiser AI is a technology company building agentic AI platforms that predict, prioritize, and monitor cyber and third-party risk. Its solutions help enterprise ingest and interpret real-time global signals to manage complex vendor ecosystems and supply chains more intelligently. Wiser empowers organizations with dynamic risk visibility and actionable intelligence to support stronger cybersecurity governance and operational resilience. Bruce, I don't know how much we've talked about AI this year. It is certainly something that we're starting to see come to market. I've had lots of conversations with potential companies coming, and a lot of them seem to be in this arena where it's existing platforms that AI can incorporate and do better than the original systems are doing. A lot around cybersecurity, a lot around infrastructure. What are your thoughts on the AI sector? What are you seeing?
I mean, we continue to see more and more uses all the time for it, and you see more companies that are coming up with unique uses for it. That's certainly made its way into the markets. The one thing that I would like to see is companies that are really producing more revenue and actually get to the earnings point. There's lots of great concepts there right now. It'd be nice to see them actually capitalizing on that. And right now, that seems to be, the picks and shovels companies who are producing chips and things like that. But it would be nice to see some of these companies that are using AI or built a system around AI to start to produce those numbers.
Yeah, I mean, I don't see us being too far from that. It is a very fast-moving sector. And I mean, this is from my perspective only, but I do feel like we've had some of these new technologies come to market, and trying to figure out where their applications make most sense. But it really just seems like the stuff that we're seeing coming makes really good sense to its applications, and something that will be, in the long term, something that will get utilized, and we will continue to grow and evolve around in a really meaningful way. So I see its application more productive than some of the other technologies that have come to market in recent years.
Right. Yeah, I agree 100%.
Okay, Bruce, before we wrap up, for the month of glorious July, what should we be thinking about going into August other than, continued nice weather?
Yeah, I mean, one of the things that I think has to be on the mind of investors is that we're coming through July being one of the strongest months of the year for performance, and then we're going into what has historically been a couple of the weaker months in the year. Doesn't mean it has to be. It's like saying this is the climate, but the weather forecast can always be a little bit different from the time. But if you are an investor, always an opportunity, especially if markets sell off, to then be able to scoop up some bargains in those months. So something to keep your eye on and to be thinking about.
Bargains are always best found with professional guidance. So you don't know if it's a bargain or not unless you have a really good due diligence practice or you have a professional guiding you. Just a nice little reminder for everyone. Bruce, it's always a pleasure to chat with you. I look forward to chatting in August. I have big hopes for the fall. I think that there's just a lot of moving parts happening in our ecosystem that could allow for a great market to come back in the fall. What are your thoughts?
Yeah, I agree 100%. I
say?
mean, there's so many dynamics right now. If some of them settle down, it could be very interesting.
Absolutely. Well, listen, thank you again. Always a pleasure to chat, and we'll talk to you next month.
Okay, sounds good. Take care.
Thanks, Bruce.